G'day folks, welcome back to an update on the 13th of June 2024. This is an update for silver and gold, which has dropped slightly since our last update, and Bitcoin and the US dollar have shifted sideways. In terms of our trends on the monthly, weekly and daily for the CCI 150, we look at gold here and the other commodities. We've got predominantly bullish still on the monthly, but predominantly bearish on the weekly and the daily, with a couple of exceptions there, plus a few other instruments we check on various other videos. In terms of a trading strategy, we trade in the direction of the higher time frame. So if you're trading on the daily, we always trade in the direction of the weekly, or if you're trading on the 1 hour or intraday, we trade in the direction of the daily trend. We enter the trade when the CCI 150 breaks out from the moving averages, and we close the trade when the CCI 150 enters those moving averages. And again, I'll go through some examples for each of these as we go through the video. First, we go to gold, and we've got here the monthly, weekly and daily trends. You can see there on the CCI 150 it's above the moving averages, giving us a bullish trend. However, on the weekly and the daily, it's broken below that moving average band, giving us a bearish trend. And plus on the daily, on the weekly as well, we did have a bearish divergence. You can see there that's still in play. And on the daily, we had another bearish divergence, and it looks like it's already come down and hit our target area. And that's between that 23 and the 38% level. In this case, it's almost it's hit this support level at 22.86 after hitting that resistance at 24.50. So we may see actually further declines. There's no sign yet of a pullback to the upside. So we may see it break through this support level in the coming hours and days. If I go to the hourly chart, you can see here we've got another couple of bearish divergence here, and they both pulled back and hit their targets. And this later one went well beyond the 38% level, came down and hit this support level, as we said. Now at the moment, the CCI is moving in line with the price, so there's no divergence. And there was a double top back here on the CCI. I'll mark that as well. We always pay attention to these small divergence versus higher highs on the price. That went well beyond the 100% retracement level of the Fibonacci range. So if you drew a Fibonacci between that range there, you can see it fell well below 100% level and went as far as the 138% level. But more often than not, we at the very least target the 23-38% target range as a minimum of a retrace on divergence. So next we're going to go to silver. So on silver, we've got a bullish trend on the monthly. The CCI is above the moving average band. On the weekly, it's broken in the range, so it's giving us a neutral signal. And on the daily, it's broken below that CCI 150 moving average range, giving us a bearish signal. Again, also notice we had no divergence on the monthly or the weekly, but we had a bearish divergence on the daily, lower highs versus higher highs on the price, and that pulled back and hit our minimum target range. You can see there it's actually broken through that diagonal ascending trend line, and again, no sign yet of a pullback. It may fall further than where we are today. And if we go to the hourly chart, again, you can see there it's had a pretty big drop in the last couple of hours. And still, we're taking predominantly short trades. So you only go short on the hourly or the intraday if you're trading on the intraday time frame, when the daily shows a bearish move like it is there. So long as that CCI is below the moving average band, we take short trades. So for instance, that would have started back here. You would have taken short trades, and you would have closed it out when it enters in that moving average band of the price chart, which probably gives you a better exit strategy than using the CCI breaking into the moving average range. Another short entry there, the CCI is below the moving average range there, and also the price. You would have gone short there, and you would have exited when it closed within that band. Go short there, close within that band. Do not enter when it's going long, don't enter any long or short trades. Remember, we're only going short in the conjunction with the daily time frame. Enter another short entry there. You would have closed out with a nice little profit there. Wait for it to break below again, go short. You might have broken even or maybe a small loss there. And again, enter another short position there, and you'd still be in a trade today. The US dollar is giving us a bit of a mixed signal. On the monthly, it's pretty much trending flat on the CCI, but it's currently bullish. It's ever so slightly above the moving average range. On the weekly, it's below that moving average range, giving us a bearish outlook. And on the daily, it's actually in a neutral range. It's within that moving average range, so giving us a neutral signal. And we did have a bearish divergence back here, lower highs versus an equal double top on the price. after hitting that resistance at 10,619, and it fell back well beyond the 23% and went as far as the 61% before making a bounce. If we go to the hourly chart for the US dollar, again, at this point, we don't take any long or short trades until we see a break above or below the moving average band on the daily. But for example, had you gone short back here when it broke below, you would have taken short trades. For example, that one there, you would have taken that short trade there when it broke below, both the CCI and the price, and you would have exited when it broke into that range there, a small little gain. You would have avoided going long or short. That might have been a little break even or a small loss on this one, going short there, and then another short entry there. Again, another maybe a break even at that point there. Now, at the moment, we're not in a short positioning or a long position. As I said, we'd wait until we get confirmation by going the daily moving to the upside or break below that moving average band. Bitcoin's been pretty bullish recently. On the monthly, you can see there it's above the moving average band, but on the weekly and daily, it's broken into a bearish outlook at the moment. So bearish on the weekly, and also it's been pretty much moving sideways, but ultimately it's now bearish on the daily as well. That's after hitting this resistance at 71,950 a few times, four or five times already, and very likely we're going to see further declines in the coming days, possibly. If we go to the hourly chart, again taking only short trades, again going short from that point there, you'd wait, and you'd currently be in a short position if you're taking a short trade from that point when the price breaks below the moving average band of that price chart, but also below the CCI chart. That's where you'd take a short position. You'd be currently open on that one. And again, you would have gone long during that little period, this period back here, and avoided going long or short whilst that CCI is within the moving average band during the neutral stage. So if you got value out of the video, hit that like and subscribe button. Support us more on the Patreon, where we look at bullish and bearish shares on the weekly time frame. Thanks for watching, and see you in a future video.